Hi everyone, thank you very much for attending this panel at Paris Blockchain Week today, Paris Blockchain Week Summit today. I am very happy here to welcome all my guests today, Lukas from Bitpanda, Anton from Flovtec, Massimo from Algorand, and James from GFG, Digital Finance Group. Thank you very much for attending, guys. I will let you present yourself briefly, what your company do, what you've been doing, and what's your background. And then we'll deep dive into the financial market 3.0.
Perfect. Thank you very much. Hi, my name is Lukas. I'm from Bitpanda. Bitpanda is one of the leading investment platforms and neo-brokers in Europe for digital assets, mainly for retail people. We have more than 1.4 million customers in Europe. We are situated in Austria, Vienna, and also regulated by the Financial Market Authority in Austria. And there is part of that not offering crypto, Bitcoin and other digital assets, but also gold, silver, palladium, and platinum, and moved in 2019 already in the sphere of tokenization for other asset classes. And I'm looking forward to a really interesting discussion today about the financial market 3.0 and everything around tokenization and security tokens in that regards.
Anton, maybe you can present yourself.
Yeah. Thanks a lot. So first, glad to be on this panel, in a virtual panel, which is definitely a new experience for all of us. To introduce Flovtec, we're a Swiss technology company, and we offer market-making solutions, both for digital asset exchanges and for token issuers, to create a liquid and efficient and stable market. My previous background was, in my previous life, I was a high-frequency trader in foreign exchange markets, and I co-founded one of the first blockchain companies in Switzerland, where I built a digital asset exchange and issued one of the world's first security tokens.
Cool. James, if you want to present yourself.
Sure. Hello, everyone. Happy to be at Paris Blockchain Week Summit. This is James Wolf, founder and CEO of Digital Finance Group. So what we do is basically we are an investment firm focused on the investment in the crypto industry. We have basically two type of investment. The first is the equity venture capital investment fund we established 5 years ago. We invest in a lot of great startups, including Circle, LedgerX, Brave. So at that time, we kind of the overall AUM we are managing is like $80 million. Right now, we actually expand our fund to not only equity investment but also token investment. So right now we focus on both layer 1 and layer 2 investment, and focus on later stage protocols and also different applications, use cases on top of either Ethereum or Polkadot ecosystem project.
Cool. Massimo.
So hi everyone. First of all, happy to be virtually in Paris today. I am the chief economist at Algorand. Algorand is a blockchain that was founded by Silvio Micali, a recipient of the Turing Award. And we are a public blockchain, but we also look at the financial world as our main interest, or with solutions like co-chain that go beyond just being a pure public blockchain. I also had a previous life. In my previous life, I was the head of fixed income quants in an investment bank. So I was already dealing with financial products, let's say from the fiat side. I grew actually understanding the limitations of traditional finance and the opportunities in the blockchain space. And that's the reason why I'm here now.
All right, thank you very much, guys, for your brief presentation. So we'll deep dive into digitalization of assets. We've surely seen this as a major innovation already happening or coming for other assets. Maybe, Lukas, if you can tell us a bit about how you tackled that aspect at Bitpanda and what makes it so particular at Bitpanda, and then we'll switch to the other participants. And don't hesitate also to react, guys, between yourselves. We have time, so don't hesitate.
Yeah, for sure. I think if we speak about financial markets and the future of it, it's a lot about regulation on the one side, it's a lot about product structuring, and it's a lot about, for sure, technical capabilities of blockchain and distributed ledger technology, how this can be utilized under a regulatory framework which supports it to bring us further. But why? Why is it, from my personal perspective, but also from our perspective at Bitpanda, so interesting? Bitcoin has shown us that three main characteristics of the blockchain technology are really interesting to retail investors and to investors in general. This is that you can fractionalize it, so that I can buy already a fraction out of a Bitcoin and do not have to buy a full Bitcoin, which is in crypto space completely normal. But if you look in the traditional stock market, for example, if you want to buy an Amazon stock as of today, you have to buy at least one share, and you cannot buy it, not really at least fractionally. So this is one topic. The other topic is the 24/7 trading. That, at least for me as an investor, buying and selling crypto on a Sunday is completely normal. Try that with traditional assets from a stock exchange, will simply not work because they are closed on that time. And then third topic for sure is the transferability. If I own a stock and I want to transfer it, that's simply, on the one side, a huge hurdle, on the other side, not possible to a third party. I cannot transfer a stock or a share. On the other side, Bitcoin can quite easily be transferred. So if we speak about the future of financial markets, I truly believe that it's all about bringing these advantages for investors, for on the retail, but also on the more institutional side, to traditional asset classes and to other asset classes. And therefore, it's a lot about a regulatory framework supporting that. It's a lot about the technology being used by market participants like us at Bitpanda, but also exchanges in traditional space, and new companies from the crypto space entering the traditional asset classes, to really bring that innovation and disruption for trading and investment in the end to the people, because this is exactly what is needed to lower the barriers for investment. If you look into Europe, especially, you see a really low amount of people being invested into traditional capital markets. And this is not just due to a lack of education, but this is also due to a lack of convenience and usability to easily and simply invest. And this is, for me personally, highly important if we speak about the future of financial markets.
Reaction, guys? Maybe you can tell us about how regulation is done, maybe Anton, in Switzerland. I know it's really advanced country on those aspects. So some others are more patient or taking times to regulate. Switzerland, as a smaller country and a more flexible country, has always been very proactive. Can you tell us a bit about how it's done there?
Sure. And just to reflect a little bit on what Lukas said, kind of I see that here three building blocks. One is actually the infrastructure, the trusted infrastructure, and it's kind of very interesting. You know, if I look at the panelists, we have Massimo representing kind of the blockchain, you know, James representing kind of the end investors, Lukas the exchange, and myself kind of the market making solutions. So you kind of understand you have different building blocks that you have put together to have all of this work, and this is kind of one piece. The second piece is actually the supply and demand. And if you kind of go and talk to people, there is no shortage of supply of assets. If you kind of talk to anyone, they have big visions of digitization of assets. But then the big question mark and the big bet is that there will be a demand side for it. Because we hear a lot of stories, you know, how institutional investors are coming in, but they haven't been in for a long time. And I think the question mark, like, will they come, is dependent on the infrastructure. So when we have this infrastructure in place, then the demand will come. And then the wrapper for all of this is regulation, as you said it, yeah. And kind of, if I reflect on it, you know, how it worked in our, with our current regulator in Switzerland, what I see is that globally you have regulators who are more open towards new technology, some who are lost in this new technology, and other ones who are just catching up to the front runners. If I have to kind of categorize it, I definitely see Switzerland, Liechtenstein, Singapore, but also Europe now with the new MiCAS regulation that's kind of wants to come into play very soon. I kind of see those as a front runners. But what I see risks there, this is just my personal opinion, that there's a bit of a issue if we just replicate the traditional markets and put them within the context of the digital asset markets. I think that could be actually quite a bit of an issue, and we see it from a kind of market making solution perspective, where people ask us, okay, so you would trade directly at an exchange. Does it mean that you're an exchange member? And I tell them, no, everybody's an exchange member because everybody accesses the matching engine directly, which is completely unknown and unfeasible in the traditional market where you have exchange members, you have regulated entities who are allowed to touch the matching engine, and everybody else goes to an intermediary. So like we have to reflect and challenge, you know, the regulator or the people who are working on this regulation to tell them this is a new world. We cannot replicate the old world in the digital asset world and hope that it will work. And kind of, if I have to say, like who personally I think is quite a bit of lost in that regulation is definitely kind of, there was a lot of challenges in the US where it's always unclear, like, is it a security, is it a not security? And I think this categorization of tokens of digital assets will be highly important for us to move forward fast and innovate. And there has to be clarity. And I think Switzerland was a front runner in that sense, because I remember it in 2014, already Switzerland categorized Bitcoin as a payment token, meaning there is no difference if you hold sterling, pounds, yen, or Bitcoin from a regulatory accounting and perspective, so on. So these are kind of the three building blocks that I see, you know, and the challenges that I see, but I would love to hear the opinion of Massimo and James to what has been said so far.
Well, Anton, I definitely agree with everything you said. Definitely, we have an issue about being able to bring all the assets that would desire to move to a digital world, where being digital, as you pointed out, doesn't only mean that you have a digital form, because this already happens in traditional financial market. It means a different way of managing the asset, of creating the assets, of trading the assets. That's what the blockchain technology provides. If you look at what we did at Algorand, having the specific goal of being a platform for creating a new form of finance in the blockchain space, we actually looked at providing a very high level of efficiency that at times is missing in other public blockchains. You know, a very low level of cost, Algorand standard assets that have been designed exactly to provide the most desirable feature for a digital product. But definitely, we recognize a big issue associated to the fact that nowadays some people see the blockchain market as unregulated and the fiat world as the regulated world. The real goal that we need to have is regulators to understand that the reason why the blockchain market, the crypto market, the DeFi market exists is because the technology provides some of the features that otherwise could only be provided by regulation. So they can really create a new experience where the principles of regulations are still respected without the need of exactly the same intermediaries or the same procedures of traditional finance. And yes, we are based in Singapore as a blockchain, and that's definitely a very advanced jurisdiction. We also have Algorand Inc., which is one of our important ecosystem partners, which is in the United States. And so we see that in the United States, obviously, the situation is very different. And I do agree that we are seeing some progress for example, in Europe. But what I really think is that, as Anton said, everyone needs to be able to understand that if we just say, okay, we recognize now there is an interest of investors into this new world, so let's apply to it all the regulations that we have in traditional market in the same way, without considering all the different opportunities provided by the technology, we are going to kill this newborn market. So that's definitely a very important point.
James, how do you see it on the investor side?
Thank you, everybody. I agree with kind of all of you. My idea is like I think for the token economy, there are actually two sectors. The first is what I see as security, and we can probably tokenize the traditional asset, make it more useful. Certainly, there are a lot of benefits about doing that. You can make sure that kind of, for example, you build a company, you want to tokenize it, then you can sell it to people all over the world. It's kind of like to give more people the access to invest in your company. things like that, it's definitely, make sure improve the efficiency a lot. So that's one sector. Basically, it's about security. The second part I would say is more like a commodity, like Bitcoin serve as digital gold. It's like totally decentralized. Then it's just they itself, they don't create any kind of revenue or profit, but it's used as a somehow like internet money. Then Bitcoin, Ether, other asset like I mean, just like protocols in the public blockchain, they should be viewed as commodity. So I will view this as two different sectors. Both of them are really meaningful and useful. But I think but two sectors are actually should be I think should be defined and should be viewed like differently.
Thank you, James. One question I was wondering when you were speaking, as you explained, Anton, in the traditional world, we have a wholly, totally different infrastructure where people have to go through an exchange member to have the matching engine, while now they can just connect to Bitpanda, create an account, boom, they're live, they can trade. And that's totally different. Those actors in the traditional world, they have a responsibility. If something happened in a wrong way, for example, for the settlement, then you go to this actor. So I think it's the same, obviously, in terms of responsibility for the actors. We have still this responsibility, it does not go away, but there is a risk in terms of protocol. On the protocol level, there is a risk, for example, how does it happen? What's the responsibility if there is a risk, there is an issue in the code itself, in the software? For example, maybe it's a question for you, Massimo. Maybe you have some insight as well, Lukas, about that. But if there is a glitch or a bug on the protocol, let's say Algorand or any other protocol that makes that there is an issue settling or funds are lost or something, how does a regulator and how would we manage that? That's a big question. I think it's a question also about the legal responsibility of software. Who is responsible? What do we do when it happens?
No, that's a very good question, and we are seeing in the blockchain space some challenges, towards the traditional rules, also about legal responsibility. In some cases we have seen some programmers considered responsible for losses, which is something that in traditional finance has never happened. So let me say that in a sense already we have seen that the legal system can act, even in this case, and at times in ways that I found even too heavy towards people maybe that were not really responsible for anything that had happened. But let's say that today the technology also provides you with very clear ways to, for example, having keys to adjust a bug if there is consensus from the stakeholders. It's also through that, under many points of view, you can set up very clear rules in case there is a litigation, in case there are any let's say any complaints about the behavior of a smart contract. That's definitely something which is developing now. If we think of how young is DeFi, we realize that now it's absolutely not true that an investor is not protected, because it may have both kinds of protection: the protection of the technology when it works well, and also the protection of the legal system if there are issues, because we have seen this happening. Obviously, the effort which is ongoing actually is to be able to provide a different form of regulation, and also a different form of arbitration or action in case of problems in the world of DeFi. This requires, as I was saying before, the regulators to understand how things are different in blockchain space and how differently they can be addressed.
How do you see that, Lukas, in terms of responsibility? Because at the end, you have an end user in front of you. If there is a bug, how do you manage that? Is it by having extended due diligences on the protocols that you use on the exchange? Is it through insurance because of the regulatory framework you are? I know Bitpanda is heavily regulated, and it's a positioning that also gives a lot of trust to the end user. But how do you manage that, this specific risk?
Yes, for sure. I think, and this starts with what Massimo said in regards to what the protocol and also the settlement infrastructure in the end, because that is what the DLT, the blockchain protocols are per coin or per asset, so to say, their settlement infrastructure. And we are not there yet to have one protocol who is exactly as reliable and fledged and future-proofed to say, okay, this is this one settlement protocol which makes mostly sense for example, tokenizing assets or also for certain other crypto coins. So in the end, currently at least, is always based that someone has to take the risk, right? Someone in that chain has to take the risk to cater and to be as protective for an end consumer. Because this is exactly what we as an exchange and especially a neo broker for our retail investors are, that we say, okay, this complexity of blockchain technology, in the end, we take away from them and cater that and support that to have a really convenient and simple and easy to use solution from a UX perspective as well as functionality perspective for them. And I personally believe that it exactly needs for to attract mass market retail investors and people to really engage into the technology, exactly intermediaries like us from a retail perspective, to make it as convenient as possible. Because this is what you, if you look on the traditional financial markets, and for sure there is a lot which does not work very well, but what works at least is the protection for our end consumers and retail investors. And this is really something which has to be also taken care of in a blockchain-based settlement world and also in a DeFi trading perspective, for example, because either the whole population will educate itself to be as tech savvy to be able to handle DeFi well and properly, or there will be, and I definitely believe this is the direction it will go, for the mass of people, definitely intermediaries who where they can trade through them, and the ones who are tech savvy or especially market makers, infrastructure providers, and companies who are working with the settlement infrastructure, they can directly access it and do not have to be, as of today, an exchange member to really be the only one having access to the exchange. So it will be definitely more open than it is as of today in the traditional space. Nevertheless, and I, as said, believe it 100%, to attract mass market and people for these assets, there is a need for convenience, for simplicity, and for high-class user experience. And this will always be done by some intermediaries.
Thank you. Anton, you wanted to react, or should we switch? Should we tackle the subject?
Yeah. So definitely to make a strong statement that I believe that the future is digital, the future is on the blockchain, it's going to be fast, efficient, cost effective, but we all understand from practical experience that automation and digitization has its challenges. And for instance, in the market making context, maybe people here recall, is actually there was a world's biggest market maker called Knight Capital. In the traditional financial markets, they had one losing day in 2014. In that one losing day, they lost 400 million and bankrupted because of technology risk. Yeah. So we kind of understand that there are some challenges and we have to mitigate them. My experience working with the regulators, that the regulators always ask, how do you mitigate risks to processes and through segregation of duties, you know? So if you kind of reflect on the risks that we were talking about in protecting the end investors, we look at operational risk, tech risk, legal risk, finance risks, and so on. And then the regulators ask, but yeah, okay, what processes do you have in place that you mitigate risks across these verticals? And I'm sure, for instance, if you worked ever at a bank, for instance, Massimo has seen this many times with regulators always ask, what are the processes to mitigate those risks? And I have also, for instance, personal experience with onboard with Bitpanda, who actually asked us, how does your organizational structure look like? Who is in charge of different matters, and how are those risks mitigated if we onboard you on our exchange? Now, what we kind of learn very fast, and this is the philosophy of Flovtec, we need to automate as much as possible. We need to digitize as much as possible. But then there are committees and people responsible that the risks, if they happen, that there's clarity how they're addressed, and as much as possible to just segregation of duties, not have overlapping interests, because then actually is when the mistakes happen. So this is kind of my experience so far. And I think the blockchain world, the digital asset world, will have to abide to this philosophy, these values, as we grow bigger and become more mature.
So we've talked about the regulatory aspect of digitalization of assets. What are how do you see the key benefits and the revolution itself for the end user? We spoke a bit about it briefly, but what's the revolution for you guys? Is it in terms of settlement? Is it in terms of liquidity on the secondary market for an asset that is not liquid? Is it so? What's the main benefits that you think will make, for instance, traditional markets shift from their current infrastructure with a lot of intermediaries to a more openness and digitalized infrastructure where everyone can access directly, everyone can have liquidity directly on any asset, could be liquid, illiquid, still you'll find someone to buy it or to sell it. What's your take on that, guys?
Well, definitely settlement is one of the points. You know, I was probably originally moved to the blockchain space by considering, you know, that settlement in the traditional financial world is a process, you know, where there is a lot of exchange of information, and then a process that needs to happen on top of this in order to have settlement. The blockchain is a very natural thing, you know, no matter, you know, the details of a protocol, starting from Bitcoin to proof of stake as we have now, is the idea that the information which is recorded becomes the settlement itself, you know. So that's an amazing and very important change that brings about a potentially much less expensive financial system. So that's definitely an advantage. But there are also things which are not purely technological, you know. We do understand, for example, I mean, let me say a very simple or basic thing. When a company needs to issue shares, already investors know that they are not going to exit from the investments for several years, you know. In the digital world, for a number of reasons, you know, we are experimenting how a company, and maybe some companies, we know, they issue both shares and tokens exactly because of this reason, because they know that there could be an additional liquidity, you know, for those who invest in tokens compared to those that invest in shares. And an investor may say, oh yeah, but I have more protection, you know, if I invest in shares. And at the same time, many investors prefer the digital asset, prefer the token, you know, because of the different liquidity they get. So I think that there can be several, you know, advantages from technological and also from the kind of markets and processes that are being created in these days. And really the big issue is still to find a full regulatory framework that keeps the positive aspects and provides some more certainty to those who want to participate to the market.
Yes. Nevertheless, I think just one point from my side, it's about simplicity and benefit for the user. So this can be as lined out by you, Massimo, settlement and therefore cost efficiency, because there are less players in the market. So it's hopefully less costs which are associated with it. So the end investor, doesn't matter if it's a fund, a company, or a private person, pays less. This is one implication. But nevertheless, and I personally believe the second part is the much more impactful one, is the topic of liquidity, the topic of tradability. 24/7 trading suddenly possible in the current market infrastructure, simply not and never, and therefore access to which is a highly important topic for Europe in general, but also for other continents and people that they simply can finally access already with 10 euros, with 100 euros, with €1 worth to build up a portfolio which can be diversified. I think this is for sure something which is quite theoretical until now, but to have 10 euros and invest them across different asset classes, different asset types, to already start building a diversified portfolio. This is the real disruption in the end, to especially in times of negative interest rates and the whole impact of now economy, and this is all over the world, I would say, after or within the Corona crisis, that the whole economic sphere is going more negative than positive, even that a lot of money is printed, right? So this is financial freedom in the end, to a certain degree, to everyone, and this is the big impact out of it from a technological perspective.
James, we had the takes for the end user of the technology and of digitalization. Can you give us your take on the investor side, on the issuer side, of what are the benefits of such innovation?
Sure. Thanks. I think from an investment perspective, it's actually, the technology help the, financial market become, more fair. So that's probably the ultimate goal for the market. Just imagine, first of all, for just like a retail investor and these second individuals, you can give, basically through the technology, you are giving them, the access to invest into the company and invest into the tokens. That's, really give them the access is really the important thing. In the traditional, venture capital industry, it's really hard just for the individual to get into, investing into this, unlisted company. It's just impossible. And if you want to become the LP of the, venture capital, you need to have the access and resources. It's almost impossible. But within that technology came out, it's probably, at least give a, chance for the individual to invest into these kind of early stage or whatever the company they want to invest if they tokenize the project, right? And, you can do a public sale, then you invest. It's really give them the access. From the, also the second thing I want to mention is from the, because of blockchain technology, a lot of things are on chain. So it's actually, create less kind of information difference between, the company, the investor, and the other people. So basically, the individual will have, basically they're almost like the same company as their institution. It's actually, help, because all the information is on chain. So basically, this is creating a much fair market. There's not a big gap for the information difference. That's the second part. The third part I want to mention is, it's actually helped the enterprise and the new idea, new project to come out, and easier for them to raise money and shorten the time period for them to become successful. So if you do a company, you go traditional way, you go to maybe Y Combinator or whatever incubator, then you came out, do like a C round, raise some money, then go to Series A, Series B, then pre-IPO, then IPO. It's actually a very, very long process. But within the tokenize the company, when you do that, that's easier. You actually shorten the time period for that. You can do a C round, then you can do private round, then public sale, then easily get listed. Especially with all the DEX like Uniswap came out, so it's actually helped the enterprise and the project and new ideas to get a fund like much quicker and shorten a time period or to become successful throughout this technology and throughout this structure for the for the overall structure. So that's actually overall speaking, I think it's benefit the investor, benefit individual, create a fair market, also benefit the enterprise. It's actually a good thing probably for everybody.
Anton, from your perspective, I'm a market maker myself, so I'm pretty familiar with the subject. How do you see, because on the traditional markets, you have a custodian bank. The custodian bank holds money. With this money, you can trade on 5, 7, 10 exchange. And then with the same money, and then you can settle at the end of the day. And so with the 1 million euro, you can trade a lot. While in this industry now, no funding, no trading, and there is a lot of ventures. There is 1, 2, 3, 4, 5 exchanges where you have to have inventory and money and funds, digital assets or security tokens on each ventures. How do you see that? Because we've seen a lot of benefits from the investor side, the end user, and so on, but from a provider like you and me and myself, how do you, what's the take on that?
Yeah, so I'm sure that you have had this experience where you spoke with people from traditional finance and you would tell them, I open an account at an exchange, and they would look at you very funny. They would say, but exchange is a matching engine, so how do you open an account there? Don't you open it with a prime broker? And then you have to explain them, no, the digital asset world is different, because an exchange is actually this hub where the custody, this off-chain settlement, the matching engine, the prime brokerage in the background, the margin trade, it's all there. But we know that's not the future. The settlement will be segregated from the exchange. The custody will be segregated. These will be separate building blocks that will be segregated, and they will build an ecosystem together. So these are the challenges actually that you mentioned, and we deal with them on a daily basis. But we know that actually this is not an intuitive way how the market should be built. We shouldn't be actually in a position to fund each account on each exchange and then move the assets back and forth when we want to transact for our clients, for instance. So it kind of doesn't make sense how we started and where we are now. But I think this is a normal process where a system is built bottom up, not top down, because top down we're smarter how it should look like. But these are the challenges kind of like we have now. And if I want to say is what I kind of think is that the foundations for our industry is actually to build a trusted ecosystem, but where the roles are clearly segregated. And that's my opinion, how the world will end looking like. The change will just be a matching engine. It will not onboard end clients. And in that context, to refer on the previous discussion is like Flovtec's vision is actually that liquidity becomes a part of the infrastructure. So when you issue a token, that it comes with a blockchain, it comes with an exchange, it comes with a liquidity from a market making solution such that the end investors like James can actually buy and sell that assets. So this is actually our vision. So that's why we think that liquidity is one of the killer applications of the blockchain. But what we have, the challenges that you described now is that the ecosystem, the building blocks kind of don't make sense. And there are risks associated with that. And I'm sure you all know there is not an exchange on the planet, crypto exchange on the planet that hasn't been hacked because they hold the assets when they shouldn't be. So this is an ongoing challenge for us, I'm sure for Woorton as well. But I think we're moving in the right direction, and the world will end up looking exactly like this, that you have segregated pieces of the blockchain infrastructure. So that's a little bit from me.
Guys, we have 5 minutes to conclude. If you have a few words to conclude, maybe Lukas, you wanted to react to what Anton said, because I think it's pretty interesting. He said that basically the exchanges will still be the matching engine, and we will settle off exchange. How do you see that? Is it something complicated, or something that is it in your vision? Is it something that I fear it's a bit tricky because an exchange would like to keep the user, because to capture the value, because the user at the end is the value. So when we just give it away to everyone, it's look, how do you see that? And then if you can, guys, conclude with a few last words. We still have 5 minutes total to conclude.
Yes, for sure. I totally see also the split up on the long run from an infrastructure perspective as lined out by Anton. So that as an exchange, the whole custody part is separated from a matchmaking engine, and from that perspective, liquidity already now from market making perspective is not part of an exchange business that's mostly externally provided, right? So yes, definitely. Nevertheless, there will be, and I get not tired to say that, a big difference between institutions and businesses versus retail people. Why? Because this is also what you can see already in the traditional sphere, that as a private investor, I simply do not care about custody, about settlement. I'm only interested in the user experience, in the functionality, and for sure in the asset offering I can trade, right? So therefore, for this target group, or for this target group, it will definitely be the difference in regards of how the custody is done and what solutions they use, because this is also what can currently be observed in traditional markets. Nevertheless, from a business perspective, and especially for hedge funds, banks, financial institutions, being active traders, then also in the crypto space, they have a high interest in having segregated custody solutions from the exchange. And we can already observe that as of today in Europe with the trends to institutional custody services, which are a couple of already in place, which I really believe will be more and more in that regards. Just one comment in regards to the question of Mathieu in our chat in regards to taxes. Yes, I also believe that the blockchain technology will make it much easier for retail investors from a tax perspective. Nevertheless, you always have to bear in mind that there is also centrally cleared transactions and trades, so not all transactions are settled always directly on the blockchain as of today. If you think about exchanges and their order matching engines, there's also needs your transaction history out of these places. But I believe that there will be some innovative solutions which can already be observed in the markets, like Blockbit, for example, also Austrian vendor, who specialized on crypto taxes. So there's also a company in France growing strongly in that regard. So there will be players also taking care on these tax topics. My conclusion in general for the whole topic is that I really believe that once the topic of which settlement blockchain technology is the one to use for at least a broader range, then it will be quite fast from a disruption and adoption perspective for traditional markets. Nevertheless, it also needs a regulatory framework. In Europe, I believe the MiCA regulation is definitely the right way to go.
James, if you want to have a few words to conclude. James, do you hear me?
Yeah, sure. From my side, I think it's all positive. So clearly, this year the ball already start. So pretty clear. I'm pretty bullish about the market like next year, and I think for this ball run, it's not just copy the model of 2017 with a lot of purely marketing things coming out. We will see really different kind of player, either CeFi or DeFi, just build great infrastructure and applications for the public. So in this forum, we will see a lot of application come down to the earth, and they're in production. Everyone can use it. Everyone can benefit from it. So I'm pretty positive about the market and about a big kind of product and great product came out. So that's my conclusion. We will see a lot of innovation in the next 2 to 3 years.
Massimo, if you want to conclude in 1 minute.
From my point of view, I'm so happy to see, for example, here 2 examples of the new intermediaries of the blockchain world that speak out their view, and we immediately understand what is going to be different from traditional financial markets. In both cases, we understand that we are in a process. We have not reached a stable point, but that's also what is exciting about this market.
Anton?
So first, it's a great panel. I'm very proud, what we are discussing today, and very bullish on our industry. And just to actually share a secret, this is not my first panel with Massimo. We actually had it 5 years ago in Barcelona. And I remember Massimo and myself were explaining what's the blockchain and what's Bitcoin. And think about it, a few years later today, Massimo and myself are again, together with Lukas and James, we're again on a panel, but we are talking about the second iteration of the digital asset world. I mean, I'm so proud, so bullish, and very happy, about the great panel.
That some of the things that we were talking about at that time look like dreams today. For example, myself working for a public blockchain.
I remember that. Yeah. So, yeah, that's from me. Yeah.
Thank you very much, guys. Massimo, Anton, James, Lukas. It has been a huge pleasure to have you on stage here. And I'm sure the participants were very, very happy to hear you, and the conversation and the debates here were extremely interesting. Thank you again for participating at PBWS.
Thank you.
Thank you.
Bye-bye. Bye-bye.
You.